Have you ever felt confused or overwhelmed about the mortgage process? Then this video is for you. Hey everyone, I'm Brady Webb, CEO of American Mortgage Solutions. And what I'm going to do today is walk you through the entire loan process from start to finish, step by step. And it doesn't matter if you're a first-time home buyer or maybe you've just been out of the market for several years. At the end of this video, I want you to walk away feeling confident and informed. So let's jump right in. So here's the truth. There's a lot of people feel overwhelmed because they don't even know where to start. And they've heard all these terms about debt to income ratio, loan to value, PMI. Nobody's ever stopped to explain those to you. Others are scared that they'll get rejected. So they just put off the conversation. If any of this sounds familiar, you're in the right place. Today, I'm going to take all of that confusion and turn it into a clear step-by-step roadmap for you. Okay, so what we're going to learn today. We're going to learn how lenders decide to qualify you. We're going to also look how to shop for the best interest rate, what to expect on closing day, what documents you need to start getting together, what happens in underwriting or during underwriting, and some of the big mistakes that can actually kill your chances to get approved. So what do lenders look for? We used to call it the 4 C's. Now we've added 1 conditions. So character. Character is how well you pay your credit. Do you pay your bills on time? That's of course why we pull a credit report. 2, capacity. How much income do you have to repay the debt, the mortgage payment, and your other bills? Capital. Do you have money to make a down payment? And then after you close on a loan, which would include your down payment and your closing costs, will you have reserves? Will you have money left over? Because that's the worst thing I want to do. I see people come in and they have X number of dollars, and one thing I want to do is when we close on this house, I want to make sure that you have some money left in the bank just in case something happens. I don't want you to fall flat on your face or become past due on your mortgage right out of the gate. Collateral. Of course, we got to look at the home. The home is the collateral for your mortgage. And then we have to do an appraisal to make sure it's of course going to be at the value that we need based on what you're paying for it and what we're going to loan you. And then conditions. Those are things that come up in underwriting. Nothing to be concerned about. It's just that it's basically a verification process of all the information that we've submitted to underwriting. And then they come back usually asking a few more clarifying questions. All right, so the mortgage process. Okay, this is steps 1 through 4. There's 2, you've heard get qualified or get pre-approved. You're probably like, okay, which one do I do? Well, getting qualified is really nothing more than just having a conversation. You could call me and say, hey, this is how much money I make. This is how much money I have in the bank. Could you just give me an idea of where I might be and if I'm even able to buy a house? Well, we can do that in a short 5-minute conversation. But what I want to do with all my clients is get them pre-approved. That means we're going to collect documents like your W-2s, your pay stubs, your bank statements, everything we would need that we were going to be submitting to underwriting if you actually had a contract on a house. Then we also will actually go ahead and get your credit. And you'll see later on in this presentation, I'm going to talk about some of the pro tips of what to do. And one of them is to get an early look at your credit. So we're going to make sure that when you are pre-approved, that you are actually going to get to the closing table and you're going to be able to buy that new house without any hiccups. The last thing I want you to do is go do number 3, go house shopping, fall in love with the house, and then all of a sudden you can't buy it for whatever reason because we didn't do a good job in number 2. Okay, so number 4 says loan application. This is basically where, because I've already got your loan application, but this is when we submit it to the lender to actually send loan disclosures to you to start the process of your mortgage loan. And number 3, you went out shopping, you found a house, wrote a contract, got it accepted, emailed that to me, or your realtor sent it to me, and then we go to what you call application, which is update everything. We'll probably need some updated pay stubs, bank statements, and then I submit your loan to one of our investors or lenders, and then we send you loan disclosures, and that starts the whole process. of your mortgage loan. Step 5, we're going to order an appraisal. We're going to do the title work. We're going to start doing all the stuff, the background things that we need on the home to verify that, one, the home is going to appraise for the value that you paid for it, because the home has to support your mortgage. And one thing that you need to know, that if you're, a lot of people ask me this, so if the house appraises for more than you paid for it, does that mean I can put less money? No. What happens is, when we request the appraisal on your property, the mortgage companies will use whatever's less, the purchase price or the appraised value, to determine that terminology, loan to value. Loan to value just means if you buy a $100,000 house and you owe $90,000 on it, your loan to value is 90% of the value, $100,000. All right, then what's going to happen is the underwriter review. So now we've sent you the loan disclosures, we've ordered the appraisal, we've got the title work, we've updated your pay stubs, we've sent all your documentation, driver's license, W-2s, pay stubs, bank statements, any letters of explanation. Of course, they have your credit report. And then what they'll do is the underwriter looks at all this, and then she comes back, which is with what's called conditions, which we talked about. Conditions are just basically, they want a further explanation of certain things. Maybe you had a large deposit in your bank account. Typically, we're going to handle that all up front before we even send it to the underwriter. Already have that letter of explanation written, but it could be something with the title work, something with the appraisal. Anyway, first time through underwriting, they always come back with a list of conditions, and that's what our mortgage loan processor and myself, we clear all those for you, so that we can get you to step 7, clear to close. Those are the 3 magic words, clear to close. That means we're going to the title company now to sign all the legal paperwork, and you own that house. That's basically what happens in number 8. So we get that clear to close, we set it all up, we give you all the final numbers, and then we go to step 8, closing date, and sign all the documents. Now, here's some of the mistakes that can actually derail this for you. 1, opening new credit. So once you call me or any other mortgage broker or company and get pre-approved, don't go out and start opening any new accounts. That is a big no-no. We want to keep your financial situation exactly as is when we pre-approve you. Now, understand things happen. If your car breaks down, the motor falls out of it, and you have to go get a new car, you have to do that. I get that. But have a conversation with your mortgage guy or mortgage gal, and talk to them about it before you actually go make that next purchase. Changing jobs. It's best that you don't change jobs, but this is not a real deal killer. Now, if you're making one level of income and then you change job and you make much less income, then now that could be a problem. But if you change jobs to improve your situation and you're moving up in your income, then it just creates we just have to do a little bit more documentation and paperwork, but that's not a huge deal. But just, it's best not to make a lot of changes during the mortgage process. Large unexplained deposits. Now, I mentioned that earlier. If you're going to put, typically, we see your automatic deposit from your employer go into your checking account or your savings account, wherever you're putting that at. But if you're putting in $1,000, $2,000 in cash, maybe you sold something, the underwriter is going to ask us where that came from. If we can't prove where those large deposits came from, then they back that out of your total available funds to close on this house. So if you're going to make large deposits, be sure you can document it. Making a big purchase early. Okay, here's the big, funny, and I guess in the mortgage world or real estate world is, people go out, buy a house, and then the next thing they want to do is go furniture shopping. So they got all this furniture. So when they get ready to move in the house, they got all their new furniture ready to go. Well, that's a no-no. Don't do that. We don't want you making any large purchases while you're in the process. If you want to go furniture shopping, you go right ahead and shop, but don't purchase until you've signed that line saying you own the house and you've walked away from the closing. And then not locking your interest rate. Typically, we always want to lock our clients in so they know what to expect. I've seen and heard of people not getting locked in, and all of a sudden something changes in the world, geopolitics, or races shoot up automatically, and now you might not qualify, because now especially if you're qualified on really close to being unqualified, when that payment goes up, it could push your ratios, your debt to income ratios, or and make you not, or just make it to where you're not comfortable with the new payment. So make sure whoever you're working with, make sure they're locking you in. All right, let's move on here. Okay, here's some pro tips. So check your credit 6 months before applying. I think this is an absolute must. Unless you are 100% sure you know what your credit report says, what your credit score is, that there's not going to be any surprises, then don't check it. But most people aren't real sure. You can go to like annualcreditreport.com, get a free credit report, look at that, send that into your mortgage broker, have them look at it, and then maybe they can give you some ideas on how to improve your credit score if it's needed. Get pre-approved, not just pre-qualified. I already mentioned that. Always make sure look at every single document. Again, here at American Mortgage Solutions, it's basically one of our standard operating procedures. We look at everything just like we're going to underwriting. And we go ahead and run automated underwriting, so we have a full approval. Once we get that, we're 99.9% sure that we're not going to have any issues when we actually have a physical person, underwriter, look at your file. And then budget beyond the down payment. So basically what that means is, I talked about reserves. Always plan on having something left over. We can help you negotiate with the seller to get closing costs paid. You still need your down payment. Now that can be a gift. You can get that from a family member, mom and dad, grandparents, brother, sister, uncles, aunts. So you can get help with the down payment and the closing costs. All right, I hear these almost every day. It says every week, but I hear these almost every day. How long does the process take? So from the time you sign your contract, now we've already done the pre-approval. Remember that we did that before. And then you went shopping. Now you got your contract in hand. Typically we write the contract for 30 to 45 days, but lots of times we can close in 15 to 20 days. So again, we always say 30 to 45. That just gives us a little bit of a cushion in case maybe the appraisal, something comes back on the appraisal and the appraisal needs to be updated, or maybe there's repairs that need to be done to the property based on the appraisal for health and safety. So we'll say 30 to 45, but we can actually speed that up if necessary. How much do I need for my down payment? Well, depends on what type of loan you're going to do. If you're a veteran, you need zero. VA loans require no down payment. Same thing for USDA loans. They're also called rural housing loans. Those are zero down payment, but they have to be in rural areas with a minimal population. And then your next two lowest ones is 3 to 3.5%. 3% for a conforming loan, 3.5% for a government loan, better known as FHA. And those are your minimum down payments. So you don't need 20%, which is a big myth. So you can give zero if you're a veteran or you're buying in a rural area, and then 3 to 3.5% are the requirements for conventional and government, which is FHA. And then, will getting pre-approved hurt my credit? Absolutely not. Inquiries are 10% of your total credit score. Your credit score could drop just a few points because there is a credit pull, but it's better to do that than not know. And I would prefer for you to walk in to looking at houses, or when you get in that car, that realtor, start looking at houses, to be 100% confident that you know your loan's going to get pre-approved. And by pulling your credit, or you're going to get approved during the process. And by pulling your credit up front, you already know that. We've taken all the guesswork out of it. Okay, so just to review here. So pre-qualified, pre-approved, we talked about that. They're kind of the same step, but pre-qualifying is just basically having a conversation. If I have X number of dollars, how much can I afford? Or I make X number of dollars, how much can I afford? Pre-approval, we looked at everything and ran you through automated underwriting. Get out, start looking for your house. Once you get a contract, then we go to what they call application. We're basically submitting your information to the lender. Then we're ordering the appraisal and the title. Then we got to go through underwriting. After underwriting, they clear all your conditions. Then we have the clear to close. That's when we call the title company and all the parties, and we schedule your closing date. That's the most exciting part about this whole process. So stay connected with us. I'd like please, if you felt like this was helpful, I'm putting out educational content at least once a week to help people like you understand the mortgage process. So please like and subscribe to our YouTube channel, because hopefully, this could help others find us, like our videos, and then be sure and turn on the notifications. Right here's our link, youtube.com/@American Mortgage Solutions. And again, thank you so much for attending this. Please don't forget to like and subscribe. And then if you know anyone that this could be useful for, please share that with them. We love helping families buy real estate. Real estate is one of the ways that you can create generational wealth. It's the best way to create wealth for you and your family over the years. And hey, let's just make homeownership a goal, not a goal, but a reality. I look forward to talking to you. If I can help you get pre-approved, takes 15-20 minutes. Be sure and reach out to me. Give me a call. We'll get you on the calendar and we'll set up a call. Talk to you soon and have a great day.